Hello, my name's Chuck, the Lauder on Tim with Private Family Banking Partners. Glad to be with you today. I'm going to take you through a presentation that's going to kind of give you an idea of what we're talking about at Private Family Banking. We call it Beat the Bankers and Be the Bank. So bear with me. We're going to take you through this, and I think you're going to come out and feel like you understand something different, something that you can apply. Let's start with a few questions. How many of these apply to you? You owe more money than you owe more than you own. How about that? Yeah, some of us are facing that. You've always dreamed about having $1 million or maybe millions of dollars, and you wish you had more money saved for retirement, and you wish you hadn't lost as much money maybe in the stock market. You used to think that the money you were earning would go further, but it doesn't. You thought you had a lot of money, but it's not that much today, and you're paying more to banks than ever. You feel like no matter what, you can't get ahead, and you feel that your finances are out of control. Sound familiar? Well, if you can relate to these, we're going to talk about how to think differently using private family banking methodology. Thought for the day, Doug Andrews said, remember, different isn't always better, but better is always different. That's kind of our theme for the day. If you wish you had $1 million or more, let's talk about that. So, most Americans make more than $1 million in their lifetimes. They just don't keep it because here's how things work out. Imagine a person earning $50,000 a year. They save it all. And over 40 years, they've accumulated with a 5% growth rate, modest rate, about $6 million. Sounds pretty good. Of course, we don't all get to keep all 50,000 that we make. Unfortunately, they can't keep it all. And so this person had a 28% tax bracket. You may be higher or lower, but the insidious nature of taxes take away from our wealth building. And the average American has what's left over, about 5 to 6% is all he can save, and he has that much left over to do life and pay for all those necessities. 90% of our after tax dollars are spent on lifestyle. That's the basics: house, food, car, college, education, recreation, you name it. And about 10% left over above the line. And most people think, well, all I need to do is work harder and save more. But what happens if the average American could save more? So, saving about 10% of your income, that would be better, but you can see in the red there, we still have all these expenses that far exceed our savings. Maybe if we increased it by 10% to 11%, it still kind of is outstripped by all those red bars. And about 90% of our money is spent on these basic necessities, and about 20% on autos, and 4 to 5% of that goes to interest there in the yellow. Another 30% spent on housing, and believe it or not, 25% of that goes to interest. And then living expenses, about another 5% goes to interest. So all in all, we're saving 10%, but we're paying as much as 34.5% in interest to other people. Imagine if we could capture some of that interest back to ourselves. That's what the private family banking system is all about. We all need capital. And so we either create our own capital by saving it, or we can do what most of us do, and that's borrow from banks, credit unions, and use other people's money or car dealers or whatever. Imagine if you could just recapture some of that and increase that average savings rate. That's 5 or 6%, which is basically we're paying 7 times more than our savings rate in interest. So it's lopsided. We want to turn that lopsided around. And implementing the private family banking concept, we create a pool of money that you control. You put the money in, so you own the bank. You use that pool of money for the rest of your life the way you would use money that you're currently getting from other sources. And since you're the bank, you receive the profits on your money. That's the opportunity cost of giving away your money in cash, paying cash, giving it to others, giving it to the banks. You're going to keep it in your privatized banking system. So the way this works is we help you create that pool of money. We put deposits into that pool of money, and then when we need things like cars and that, we're going to use that banking system so that we can recapture the interest that we have been paying to others and get that savings amount to be the dollars out for autos to go down and the net savings to go up. That's what can happen just on automobiles. We move that cost into money we recapture. And so, private family banking system, we you can see here we're adding that for the cars, and then we can also do credit cards and get rid of those credit cards. And if we add that to the pile, we move that over, and all of a sudden, our savings is growing and growing and growing over the rest of our life, which is takes advantage of that long-term compound interest, and eventually you might be able to take over your mortgage, which would be huge. Look at how much we can move over if we diminish that interest paid to others and we capture that ourselves. Now we've turned this thing around. You can see the stack up on our side of the curve, and that's going to be moving it towards a whole different level of prosperity than you currently are. And so the principle is every purchase we make, we pay interest. It costs us interest. That's interest we pay up or we give up. We pay up by paying interest to others, and we give it up by giving up our cash and letting somebody else earn money on that capital when we could be earning on that money. And with a private family banking system, we'd be earning money on your capital at the same time you're using it to do life and do those basic costs that we saw in those earlier graphs. Private family banking unlocks the secret to this process. Thinking like a banker, we want to have our money working all the time. And we need a financial instrument which allows us to accumulate a pool of capital into quote unquote our bank, and it'll be guaranteed to grow, guarantees us access to our money, ensures that it profits, and it's protected from income taxes, which is a huge advantage, as you saw earlier. This is not anything new. Bank owned life insurance. The banks actually own more life insurance than they do real estate assets. So guess what? Those bankers are pretty smart. So we need to get as smart as they are and take advantage of this um, system that we've put in place called private family banking. So they're going to not maximize the death benefit in this life insurance policy that we're using as the banking system. We're going to maximize the cash value or the cash component of it. So policies optimized for private family banking in the green there are going to have much more cash value in the early years than typical whole life insurance. So we're using a dividend paying whole life insurance policy held by a mutual insurance company. And it looks like, let's look at how our bank can help us in three different ways. We'll just do buying a car. We can either borrow money from the bank or credit union or a financier of some kind, the auto dealer, or we can pay cash, which a lot of people do, or we can use a private family banking concept. So when we finance a car, we borrow money from others, and my face is in the way there, but you'll see the total outlay. Let's see if I can move that out of the way. Well, it didn't move. The total outlay was 31.99 in interest, but yet with a private family bank, that same money grew at the same time to 44.20 for a net $1,200 gain. If you gave that money away in cash, or worse yet, you financed it and you were out 3,200 or 31.99, you'd be out 31.99. If you pay cash, you're missing the opportunity to grow that money to 44.20 and outstrip that cost of 31.99 and put that money back towards your next car. See, the person who pays cash, this is what it would look like over a lifetime, 10 transactions of this nature, where you're borrowing money at one rate, and even though that's higher than this rate, this compounding beats the decreasing value of that loan as you pay it back, like you would a car loan. But over the lifetime, it's around $257,000 in this example, maybe more, because that was only a $20,000 car. You can use private family banking to make rental and lease payments. You can save on insurance by paying annually versus monthly or quarterly. You can increase your charitable giving, augment your retirement savings, provide some disability protection, and build multi generational wealth. Pass it on to your children tax free. Remember what Doug Andrews said. He said, remember, different isn't always better, but better is always different. So that is a very short and quick presentation, but the key concept here is instead of giving the banks your money or giving it to others in interest, we're going to get that money into your capital. You're going to collateralize loans against your own money, earn more money on that capital than you will pay in interest back to the policy that we set up for you. And we call that private family banking. It's a concept that's tried and true, and it works for most people. If you're in debt, you have credit card debt, we help accelerate that. You are going to buy things in the rest of your life. So this is just taking the same money you're going to earn and running it through a different system and doing the same expenses. If you just do what you were going to do anyway, you're going to wind up eons ahead using this system. Thank you for your attention. I hope you'll get a hold of me. Email me, Chuck at Private Family Banking, Chuck at privatefamilybanking.com. Chuck at privatefamilybanking.com will get it. Send me an email and we'll get together. Thank you for your time.